All right, now this is an interesting one. Gold, silver prices, the paper markets, how bankers have always been net short on the Comex. Always. No matter what, they are net short. They always have that short position. Then they cover their shorts, and they go short again to keep the price suppression going. And this is interesting here because the latest bank participation report, which is released, it's always like a week behind, but you at least get to see what it says, whether it's a week behind or not, has some interesting information in there. And the long story short, so I don't have to read this massive thing to you, is that for the first time, like ever, literally ever, pretty much, U.S. banks, namely, as you know, the big ones, JP Morgan, HSBC, the ones who are in the paper short market, or in the market short, have gone long. They're no longer short. They are now going long in the gold. This is the gold report. So they have gone long in their gold holdings, paper. So he says, Holy Toledo, let's see if we got this right. On 12/4/2012, 1 week before the Bernanke confirms QE infinity, the U.S. banks, namely JP Morgan, are net short 106,000 gold Comex contracts. That's approximately 331 metric tons of paper obligation. Just 6 months later, after a massive and counterintuitive sell-off that ripped over 30% out of the gold price and costing investors worldwide billions of dollars, the U.S. banks are now net long 44,000 contracts, or 140 metric tons of, again, paper gold. He says, wow. Again, note that the non-U.S. banks have apparently been cut out of the deal. Yes, they've trimmed their net short position by 50%, but they're still net short 23,000 contracts. Again, notice the non-U.S. banks are still clueless. They just keep drudging along with their shorts. The U.S. banks, however, are now net long 185 metric tons of paper gold. Now, from the initiation of QE infinity, the U.S. banks have made a net move of 516 metric tons. Again, paper. Simply incredible. So we have something that has not happened before. If that is a sign that sometime in the near future, prices are fixing to go up, would the banks capitalize on that first? Yes. And Jim Sinclair has been saying that that's exactly what would happen when we would expect the price sometime in the near future to rise. You would see the banks go net long, the controlling banks, and that's the ones who just did it. Now, aside from that, but tied together with this, Barrick Gold Mine Company is like the world's largest producer. And there's news as of October 31st, 7 in the morning, yesterday, Barrick to suspend work at its Pascua Lama to reserve, that's their site, to conserve cash. Barrick Gold Corp, it plans to temporarily suspend construction at its $8.5 billion Pascua Lama mine project as the world's largest producer of the commodity tries to conserve cash after prices slumped. What was something old J Snip 4 said a little while back, multiple times? That the government and the bankers, they're like this anyways, they're one entity for this purpose, can either allow the prices to rise and let these gold mining companies and the smelters and everyone else make a couple dollars and be even a little bit profitable, or they can continue to keep the prices down and force these companies into bankruptcy, which will not be good, because then you want to talk about a shortage of worldwide epic proportions. That would take place because there's hardly anyone mining gold anymore. This one, being the largest miner period, is suspended due to the price drops recently. Not worth taking this mine to the next level yet. We're going to kind of stop for now. So the government is going to say, okay, it's time to let the prices rise. We've squeezed out everyone we can squeeze out. Apparently, most people aren't buying it. We tried. we're going to have to let the prices rise, at least enough so that these people can make money, these miners and whatnot. So is it not ironic that this is something that the mining company has said, due to the price being so low, it's not the level where it's worth going and getting this mine operational to where we can get lots of gold out of the ground. Not worth it right now. So the government's going to have to say, well, them and everyone else still is showing like profit loss every quarterly and whatnot. Some are the smaller ones. Some of them can just barely break even. Most of them still post at least a small loss at current prices. And I'm talking a lot of that silver in the silver industry. But nonetheless, obviously it's in the gold industry because the world's largest mining company here just said we're halting it for now. Prices aren't good enough for us. So the federal government may have to say, time to let the prices rise. And if the government was to say time to let the prices rise, then you'd think the banks who suppress the price would be going net long, preparing for the price rise. And that's precisely what just happened. Does that mean that prices are going to jump right away? Next week, next month? No idea. It only rises when they want it to. But they still have to be positioned so that when it rises, they make out like bandits. Because they are a bunch of bandits. Robber barons. So this is very interesting news in the precious metals market. Absolutely worth reporting. Banks are now showing net long in the Comex paper market. Unheard of like ever. You got gold? You got silver? I hope so. Because I know I do. Take care.